Hey everyone, thanks for joining us on this webinar, Save Time and Money with Integrated B2B Payments. My name is Brian Nunes. I'm with APS Payments, and today from Wagento, I have Brent Peterson.
Hey Brian, how you doing?
I'm doing great. So thank you, Brent, for inviting us to do this webinar for your clients. And I want to introduce myself. Again, I'm Brian Nunes. I'm the Senior E-commerce Channel Manager with APS Payments. And we work in the e-commerce and ERP space to provide B2B and B2C companies with payments that integrate to their ERP systems and also their e-commerce platforms. And so today we're going to be discussing integrated B2B payments specifically.
Yeah, perfect. And my name is Brent Peterson, and I am the e-commerce evangelist for Wagento. And we are a primarily Magento company, but we're also now a big commerce partner. So we're excited for both of those platforms. And we're excited to hear about the APS payments and how they can help fit in with our B2B customers. So Brian, why don't you take it away?
All right, thank you very much. Yes, Magento and B2B commerce starting to really embrace the B2B channel. And some things we're going to be talking about today. We're going to talk a little bit about us, who we are as APS Payments. We're going to look at some challenges in the payment processing industry, why it's a benefit to integrate payments, understanding those confusing merchant statements you get, because as we know, when you get a merchant statement, it's filled with all kinds of data and numbers that sometimes don't make sense. So we're going to dig into that and figure out how we can make sense of that. One of the things you won't want to miss is the biggest thing that I think we're going to bring today is level 3 payments. And it's a thing that a lot of B2B companies don't take advantage of, and it's just because they don't know about it. And so we're going to unlock that vault that opens up that knowledge of some savings that maybe you haven't been taking advantage of. And then we're going to walk into understanding PCI. And this is such a scary subject. And I know a lot of merchants avoid it and just don't want to look at it in the eye, but you really need to. And we want to let you know that you don't have to fear that. You have help, and we want to help you. And we want to make it something that is not scary anymore, but something that when you engage with a company that understands PCI compliance, you don't have to fear anymore. And I think that's important for merchants because there's a lot of penalties and things that could really hurt your company, and we don't want you to experience that. And then we're going to tell you about how we can make a difference in that. All right, a little bit about APS Payments. So we've been in this business for a long time, definitely over a decade. We have thousands of merchants in over 20 countries. So we've seen and we've heard everything there is. You can't throw something at us that we probably haven't dealt with yet, and which is great. And so we have tons of experience with that. No customer is too small or too big to work with us. We have some customers that are doing just $2,000 a month in transactions. They're just getting started. They're trying to build, up to companies that are doing 20 million plus a month in transactions. So we have that experience ranging from smaller companies working their way up to build themselves into a bigger company to companies that are large and they're doing tons of transaction volume per month. So we are involved in all of those. We are ranked as a top 100 acquirer in the United States by Nielsen reports. And we've been on the Inc. 5000 list 2017, 18, 19, and coming up on 2020. And we integrate with multiple ERP systems, e-commerce platforms, point of sale systems, and mobile applications. And one of the things that really stands out about APS is that we have 24/7 live support. And it's always nice to be able to call into a company and get an actual live human being on the phone. And that's what we pride ourselves in. We do that 24/7. So that's a little bit about us. The other thing to know is that, we're not so big that we can't relate to you or communicate with you or have fun with you. We enjoy our merchants. Okay. One of the things is we know payments. And if you look at this picture, we're just a family. We're a business. We are actually about 300 employees now. But
Brian,
from these pictures, you can
I'm so sorry
tell.
to interrupt. Brian,
Yes.
I'm sorry to interrupt, but would you like to share your screen with us?
Oh my goodness, am I not sharing my screen? I am so sorry. Let me do that right now. Thank you so much for.
Perfect. Thank you.
Do you see it now?
Yes.
Yes,
thank
we
you.
see it.
You do. Okay. My apologies. What you missed prior to this was just this, basically everything I said to you. So thank you, Patty, for letting me do that. So what you see here is a picture. We're a family. We really are a family. We may have 300 employees, but we really dig in and take all of our merchants on as family. If you want to know what I look like, if you look at most pictures, I'm the one that looks the most ridiculous. So the top right, I'm wearing glasses with some light shining on it, and the bottom left, I'm the only guy in the photo, and I'm wearing big purple glasses. So that's me. And like I said, we're a big family. And thank you, Patty, for reminding me to turn on my screen share. All right, so let's get into it. What are omni-channel payments? So if you're a B2B merchant, whether you know it or not, you're probably dealing in omni-channel payments because you are either taking orders on the phone, orders on your website, orders from a terminal at a local facility, whether it's a showroom, or you may even have salespeople in the field that are visiting your customers and taking payments through mobile apps or things like that. So omni-channel payments, that's an important thing to understand. 73% of customers use multiple channels during their shopping journey. If you look at from the B2C side, if you probably understand this, when you're purchasing something, sometimes you go to Walmart, sometimes you buy online, sometimes you buy and have it where you pull up and they bring it out to you. I know with COVID-19 now, a lot of people are shopping online, driving up to the store and having someone deliver it to them. Well, all these things are omni-channel experiences, and customers who use 4 or more channels spend 9% more in the store on average when compared to those who just used one channel. So 78% of retailers admit that there's no one brand experience across their channel. They're seeing multiple channels, the omni-channel payment experience. Now, B2B payments help bridge that gap. You know, we have integrations into multiple systems that allow your company to be able to offer the same type of customer service and ease of payments through multiple channels, whether it is your call through, your e-commerce site. We're tokenizing data and sharing data throughout those systems that allow you to make it easier for the customer to pay. Because a customer, if they're using multiple channels, they want to know that they don't have to always retype their information, or when they're calling in, they have to always give their credit card number. Once they do it once, it's tokenized in the system. If someone calls to make an order that had made an order before online, when they call in, your customer service rep can say, hey, do you want to use your card ending in 4003? They're like, yeah, let's do that. It just makes it easier for the process. And what we're finding on the B2B payment side is that 93% of wholesale buyers prefer to buy online. So we've had, in the B2B space, it's always been a little bit behind the B2C space. But your customer experiences things on the B2C space, and they expect those same kind of experiences on their B2B side. They're starting to want that experience now. And so what we're finding is that wholesalers, their buyers prefer to buy online or on their mobile versus your normal phone, fax, email type situation. They want to be able to have quick access to customer specific pricing, available inventory. They also want to be able to see their invoices online, and they want to be able to pay all that stuff online. So this Forrest Research example is showing that 93% of them prefer to buy online. Now, if we look from the customer perspective and we look at paying by credit card, it's simply better, faster, and cheaper. It's faster because they can use credit card, and they're in this, specifically in this COVID-19 environment, we're looking at times where it's harder to get approvals and signatures on checks for payments on invoices. And the other thing is, it costs your customer a lot more to send you a traditional purchase order and then a check and all those things. So what we're finding is it's a lot cheaper for your customer to find their products and pay via credit card. And on the merchant side, which is your side, it actually is better, faster, and cheaper for you to accept credit cards when it comes to invoices and allowing your customers to pay online. You know, it makes sense to collect via credit cards. You know, we discussed how customers prefer to pay by credit card. You know, here's why it matters to you to make it easier reconciliation and via reporting to collect via credit card. It's faster because you get your payments faster. It's cheaper because it takes actual less employee time to complete payments. So instead of having to deal with checks, wire transfers, and a number of different things, being able to create or to collect credit cards makes it 49% cheaper for you to do business. There are always fees related to credit cards, but it's actually cheaper than what you're paying your employees to process checks. And so you get your money faster. It's just a better way to do business. And people are, you know, people nowadays are just used to using credit cards to do business. And companies are issuing credit cards to their employees. Corporate credit cards have gone up significantly. And what you'll find is that many of these corporations are using corporate credit cards. One, because there's huge perks involved to the company to use credit cards. And they're actually taking advantage of that. And we're going to get into this a little bit later when we talk about level 3 processing, because that's going to help you reduce the burden on your side on some of the fees that are involved with taking corporate credit cards. So, the impact for your business is you can actually increase your customer satisfaction by taking credit cards. You can increase your cash flow. The efficiency of taking payments and handling reporting is a lot more efficient with taking credit cards. So overall, that affects your bottom line. Some challenges we're seeing in the payment processing industry right now is that duplicate entry is time consuming, especially if you have an e-commerce platform that's not integrated. So you want to make sure you're working with an e-commerce agency and a payment provider that can provide some help when it comes to integrating your e-commerce platform to your ERP platform. Some other challenges are, let's just face it, when you get those merchant statements and you try to look at that merchant statement, those fees are very confusing. It's not very clear where your money's going when you see that you're doing 300,000 in transaction volume and you're paying over 5,000 a month in merchant fees. It's not very clear where those fees are going and who's getting that money. So it's definitely something to look at, and you definitely want to understand that. The other challenge is not all payment providers provide level 3 processing for B2B transactions. And like I mentioned, we're actually going to dive into that level 3 processing and understand what the value is if you're a B2B merchant. Also, customer support a lot of times is not live 24/7 support. Some companies are very large and they have support, but you just can't get someone on the phone. If you have a large payment coming in and something goes awry with it and it gets rejected or declined, and your customer calls you and said, hey, I tried to make a payment and it declined it and I don't know why. Well, you don't want to have to worry about whether or not you can get that taken care of. You want to be able to call a company that when you call them, you actually get someone on the phone and they can work with you to figure out what's going on and resolve that issue. So that's definitely a huge challenge nowadays, especially when more companies are spending time making their purchases online. You do not want to be in the situation where you have to, it takes more than a day to get a response on that. The other thing is reporting and the flexibility of reporting you need. We know every company's different. They need different kinds of data. You need to be able to work with a company that can provide you the type of flexibility in reporting that you need. Also, if you happen to be a company that takes payments internationally, that's not everyone, but there are companies that do. You want to be able to see or have the ability to take international payments. Specifically to the COVID-19 thing. So let's look at, some problems that we're seeing and that we have thousands of merchants that we work with. And we're hearing a number of different questions, especially with new ones coming on, is that they had a lot of customers who would pay their invoices via check. And what we're seeing is that there has been a slowdown in payments. It's not because the customer doesn't want to pay or doesn't have the ability to pay. It's more of a, hey, we're not all in the office now. So it's a little bit harder to get things processed the way we used to when we were in office. Before, we used to be able to just say, hey, let me walk this over to the person who can sign this check. They'll sign the check and we'll send it off. Well, people just aren't in the office now. So it makes it a lot harder to get checks signed. So we're seeing that as a challenge for certain businesses, and they're looking for ways to resolve that challenge. The other thing is, everyone's kind of been hit hard in this economy right now. So some are short on cash. Now, if they're a net 90 customer and they're now at 120 days and they haven't paid, it might be that they just don't have the ability to pay. However, if they could get an extra 30 days, they might be able to pay. So being able to accept a credit card actually extends your customers' payment terms by 30 days without you having to extend those payment terms for them. So it gives them the ability to pay you, and it extends their terms for 30 days just through the credit card company. And they're also looking for ways to cut expenses. Using credit cards is a way to streamline how much it takes to actually process a payment. So, if accounts payable team can use a credit card, it definitely makes things a little easier on them. So, in conclusion on this part, integrated payments can offer a lot of benefits. We went over reduced processing times, workflows, streamlining operations. We didn't touch on this, but it does increase data security, because when you're working with a PCI DSS compliant credit card processor, that definitely increases your security. The availability for reporting and the details you need for even reconciliation on payments is helpful if you have a credit card processing company that can provide you the reports you need. For you, the merchant, cash is king. So when you're looking at next day funding on credit cards, that definitely makes a huge difference. And then also the savings related to level 3 transactions, which stick around because we are going to go over that, and it's pretty exciting information. All right, so let's delve into the exciting world of merchant statements. So the first thing you need to know, credit card processing companies, there are generally 3 different ways that they handle their fee structure. One is flat rate pricing, which you're probably familiar with your PayPals and Stripes, where it's one fee. They say, hey, we're going to offer you 2.8%, and that is a standard rate. Tiered pricing, which is basically multiple flat rate pricings based on different tiers. It's a little more confusing. Generally, they offer a number of different tiers and rates compared to what tier that transaction falls in. They range from a fully qualified rate to a mid-qualified rate to a non-qualified rate. And the difference in the percentages could be significant. A fully qualified rate might be anywhere from 1.65 to 2.1%, all the way down to a non-qualified rate that might be anywhere between 2.85% and 3.5%. What we found in most of our analysis of merchant statements is that most of their transactions fall in the non-qualified rate, which can be confusing. And then there's what's called Interchange Plus. Now, Interchange Plus is where the merchant pays the true interchange rate from the card brands. And then the merchant, the company that does their payment processing, adds a multiplier on it, a small percentage. And that is just to help them pay for what they do as a business. It's definitely the most transparent solution when it comes to fee structures. It also gives you the most flexibility for the possibility of lower rates. So we basically walked through we talked about the flat rate side. Those are generally those are flat rate fees, and there's really no option for reducing that through things like level 3 rates. Tiered rates, like I mentioned before, fully qualified, mid-qualified, non-qualified. And you've got your Interchange Plus, which the merchant just ends up paying the true interchange cost from the card brands. And by the way, just so you know, there is no advantage how big your business is or how small your business is on interchange fees. If Visa has an interchange fee, it doesn't matter if you're a mom and pop shop or you're Walmart, that fee's the same. And all that really counts is your merchant processor and what you work out with them in terms of what the markup is above interchange. Okay, so now let's dig into the fun part. Let's talk about level 3 processing, because this is something that could significantly increase your profit on your business immediately. Wouldn't you like to save 43% on your transactions, on B2B transactions, without having to do anything special except for do what it takes to get level 3 rates? If we look at the numbers, so level 3 was introduced in 2012, and the intention was to drive the cost of B2B transactions down. Why? So the question is, why were B2B transactions so high on credit card payments? Well, here's the thing. Visa and MasterCard, they want everyone to use their credit cards to pay their vendors, right? So they introduced corporate cards with huge, just great perks. I don't know if you've ever talked with a president or CEO of a company that takes their family on a no expense European vacation every year based on the points on their credit card. Well, Visa and MasterCard made such great perks that companies like, let's just say it's a printing company, and they buy all their paper and their ink and everything related to their printing company on their corporate card. Well, they get benefits from that. They're spending millions of dollars to their vendors for the product that they would normally in the past have purchased with a check. Well, when they do it with their credit card, they get huge benefits, and it's very appealing. It also gives them the ability to offer certain employees with company credit cards. So when they travel, they do events and they pay for those events. So there's a lot of volume going through there. So Visa and MasterCard wanted these companies to use this card, and they offered huge perks. But guess who pays for those perks? Visa and MasterCard are not paying for those perks. You, the merchant, are paying for those perks with higher rates per transaction. And what they found was merchants were starting to not accept those corporate cards. And they said, so, well, we need to do something about that. We need to offer the ability to lower those rates if we can prove that it is a B2B transaction. So what they did is they said, okay, if you can prove this is a B2B transaction, we will lower your rates. And that's where they offered the level 3. Now, here's some things we know. 80% of the companies B2B that do B2B transactions currently do not take advantage of level 3 data, the level 3 rates. Here's another thing we know. On the small business B2B companies, we are saving them on an average $18,000 per year on just merchant fees. So that's something to think about. There's a lot of companies that aren't taking advantage of these level 3 rates. And let me tell you why they're not taking advantage of it. Because it's not easy, okay? What Visa and MasterCard requires is that you send them these, this 15 or 16 points of data to be able to qualify for level 3. And the reason they do this, they just want to say, we want to make sure that this is a B2B transaction. So if you send us this specific data, then you can qualify for level 3. So there's things that come with any transaction. You've got total, date, tax amount, postal codes. Those are all very standard things. But then you've got things like invoice numbers, orders numbers, commodity codes. Who does commodity codes? Well, these are things that sometimes are issued by the issuing banks. So they might give you a commodity code, and that just has to be pushed through during the transaction and passed on to the card brands. Well, at APS Payments, we make sure that every transaction that goes through meets the requirements for level 3. So that immediately gives you the level 3 rates. And let me tell you, the level 3 rates are significantly lower than if you did level 1, level 2 rates. For example, a standard rate on a Visa corporate card is about 2.9%. Or 2.7%, I believe. Yeah, 2.7%. If you just push level 3 data on that transaction, it goes from a 2.7% immediately to a 1.9%, which is significant. And if you have transactions that are above $7,000, that brings it down even more. It could lower it to 1.3%. And we have some customers that they do $50,000 to $100,000 transactions on corporate cards, and their percentage that they're paying is 0.5%. So I think if you had a $100,000 transaction, I think you would rather pay 0.5% on that transaction than 2.9%. That is very significant and goes directly to your profit. So that is why level 3 is extremely important. Now, so let me go into some examples here. So what you see here is an analysis that APS Payments did on an actual merchant. Now, as you see at the top, their total monthly volume was $487,000 a month. They were currently on a tiered structure. And what you see is that they were paying on that $487,000 a month, their fees were $16,106. That's a significant amount of money. I'm not saying it's unfair, it's just what it was. They sent us their merchant statements. We ran through the analysis process, determined that we could cut their rates, and also what they would save related to level 3 processing. And for that particular month, running $487,000 in monthly volume, their fees would be $10,783 versus $16,106, saving them 33% and $5,322 that month. Assuming everything was pretty much the same through all 12 months, the assumption would be that they would save $63,000 a year in just processing fees. That's a significant amount of money. That's the salary of an employee. You know, I think today with, you know, if you look at the COVID environment and being able to try to keep your business afloat and keep employees paid, that would be significant. So we take a great deal of pride in being able to save businesses money that they don't need to spend so they can invest back into their business. All right, so let's look at, so this is interesting. So if we take a look at a lot of statements here, and many of the competing processors, their statements are very confusing. They don't provide much insight. And there's absolutely no visibility of what type of credit cards were being received. So what you see is a big list of, you might see the whether it's Visa or MasterCard, but you have no idea what kind of card it was. And you just don't receive any information on that card and what fees were applied to that specific card. And so you just have to accept it. And we want to make sure that you have the visibility to see what it is you're being charged on credit cards. So for example, if you look at an APS statement, there is a lot more visibility to what's going on and what is getting charged to be able to itemize fees by credit card. So for example, there's, what is there, an amount of $28,434. It shows that was a Visa CPS rewards card, and it shows you exactly the fees that you were charged for that transaction. So we want accountability. We want you to see what it is we're charging. And if you have questions about that, you can always call in and actually talk to someone. And there's someone to explain that to you. It's just nice to have that type of visibility, that transparency from a company. You know, as a company, we're not afraid to make money. We have to make money as a company in order to provide the service we do for our customers. But the one thing we do is we actually tell you what it is. This is how much money we're making on your account. We're not ashamed of that because I think we provide the value and the support you need to run your business. So we think there's value in that. And we're not ashamed to show you what that is. So with our statements, it'll be totally transparent. And you have every right as a customer to say, I think that's unfair, or I think that, you know, that's great, or whatever. But we don't hide it. And I think that's one thing I'm really proud of on the APS side, is that we are fully transparent and we're not trying to hide anything from any of our customers because we value them. And that's probably the reason we have you know, a 95% rate of customers staying with us. We don't have a lot of people dropping off because we work with our customers on a day-to-day basis. All right, we're gonna walk into something that's very scary, and a lot of merchants like to hide their face from it, but it's something you gotta deal with. Are you ready for this? PCI compliance. This is a lot of merchants, they just don't want to face it, right? But the reality is that you have to. You're providing a service to customers, and you also have to provide the assurance that you're going to keep their data safe. You have to. It's your responsibility as a merchant to make sure that the data you're collecting is not going to be compromised and that your customers will be safe. Your customers expect that. And the PCI and DCS compliance law, it's not really a law, but it's there, and you have to abide by it. I guess you don't have to, but there can be certain consequences if you don't. But don't fear, because there is help, okay? There are questionnaires that you have to provide on a yearly basis. And if you don't provide those questionnaires, then you are liable in case there is some type of fraud or data breach that happens to your customer base. You don't want to be in that situation. Let me tell you why. On average, data breaches cost US businesses $7 million. How many of you have $7 million laying around to spend on legal fees and compensating those whose data was breached, right? The costs, they come in many forms, okay? They're not limited to this, but let me explain some things that cost goes to. Remediation. You've got the cost of your business disruption. There are regulatory fees and fines for this, legal costs, and don't even talk, I mean, the public relations costs on your business. How does that affect your business? You know, you've got breach of client records. You've got the cost of notifying all of your customers about the data breach. Then you've got things like credit card reissues, identity theft repair, and monitoring that you'd be responsible for all those that were affected by a data breach. I don't think that's any situation a business wants to find themselves in. So it's important. And guess what? It's not rocket science. It's not hard. I think people just avoid it. They don't need to avoid it. They need to be on top of it. But we have your back, okay? You know, we have invested a lot of time, money, and resources to help companies avoid being the next victim of a cybercrime. You know, our goal is for every merchant to be PCI compliant. And we're so dedicated to this that we actually invest in helping our clients at no cost. We do all the heavy lifting. And there are some things that you have to do yourself, right? So we can only do so much, but there are things that you have to do as a company. And the good thing is, you know, we know these things backwards and forwards, and we guide you on the steps you need to take in order to be fully compliant. So you don't have to fear. Any merchant that works with us, we will guide them to PCI compliance, making sure they submit those reports so they are not liable if someone happens to breach. You know, you can never say never, right? You do your best to follow PCI guidelines. That's not to say you never would be breached, but if you do all the right things and follow all the compliance measures, then you are not held liable for that, and you avoid all the lawsuits and everything involved with that. Now, does it happen a lot? You know, maybe you'll never be a victim of that, and that's great. But let's put some insurances in place to make sure that if something happened, you don't have to close your business. Okay. So with APS, we're not just we're what you call an all-in-one solution, in that we are the credit card processor, we are the gateway, and we also are the integration. On the gateway side, we're very competitive with the solutions out there. Most of the times we're beating them on pricing. Monthly gateway fees are usually $25 for $10. We don't charge for daily batch fees. We're pretty standard on transaction fees. The one thing that's the biggest piece of this, and we talked about level 3 processing and how much that's going to save you, is that we're one of the few that actually do level 3 processing through our gateway. You can't get that through authorize.net. You can't get that through a number of different gateways. And we pride ourselves on that. And it's just a service we have to provide for our clients. So, here's reasons why it makes sense to engage with us. Yeah, we save money. One, through offering level 3 processing. We don't charge for installation, maintenance, or setup fees. We have 24/7 support. It's we try to make it as easy as possible for merchants to be happy and do their business through us. That's the most important. The other thing I'd like to throw on that is that we don't have contracts. We don't have contracts with our customers. We don't say you have to be with us for a year, and if you don't, you're going to pay this fee. We don't. If a customer doesn't want to be with us in a month, then they can leave, and that's okay. We don't mind. We just don't have many people that do that. We just believe in what we do, and we go from there. If someone doesn't want to do business with us, that's fine. We can appreciate that, and we let them move on without any type of fees. So I think that's a good point to think about, because there are some processors that do require you to sign long-term contracts. We do not. All right, and of course, I just mentioned this, installation, setup, and maintenance is always included. We want to make it as easy as possible and as cheap as possible to do business online and provide your customers the type of service they need. We have some things here. If you would like to learn more, you can go to the wagento.com/en/partners/APS to learn more. And we invite you to, one of the things is we'd like to invite you to just send us a couple merchant statements. Let us run an analysis and see where you stand on your current provider. A lot of times we'll do analysis on statements, and we give you some tips to go back to your current provider and have them lower their rates for you. And maybe you don't come to us, and that's fine. What we find is eventually the people that we help eventually come back to us because their providers, bump up the rates without their knowledge and things like that. And they just want to end up doing business with a company that they trust. So we do this for free. We do an analysis like that one that I showed you where the company was doing 400 and something $1,000 a month in transactions. That example where we saved them about $3,300 a month. We'll do that for you for free. And thanks to Wagento, we can offer that for free to you guys. So, why not, right? And with that, I want to say thank you so much for checking in and watching this. I hope I didn't make it too boring for you. But if you want to touch base with us, I suggest first you go to Brent Peterson, your e-commerce evangelist, and ask him some questions. And if for some reason you want to get in touch with me directly, there's my information. And that's about it. So Brent, thank you so much for letting me share some information with your clients.
Yeah, Brian, that was great. That was a lot of very good information. So I just have a few questions and some thoughts on especially these B2B clients, and even some thoughts on clients now that are traditionally doing B2C, but because of the market and because B2C is so entrenched in doing business online, or typically online only businesses are doing it so well that they are finding that B2B are now coming to them. So in that case, so for example, if you are traditionally a B2C seller and you have a very competitive product, and suddenly you're finding that you are getting inquiries from people or from other companies that, hey, I'd like to buy 100 of these or 200 of these. This seems like a perfect time to re-look at what you're doing on your processing. You may already have credit cards, but it seems like this would be the perfect time to just do an audit, see what you're doing, and maybe you could explain a little bit more about what that would mean if they were to get this level 3. I'm assuming that any B2C customer would not qualify for level 3 processing, but if there's a certain vertical that the merchant can produce, so to business clients, they would qualify for level 3, correct?
Yeah, so it really depends. So here's the deal. We always push level 3 data, whether it's a B2B or B2C type site. And the reason you do that is because you don't know what credit card that person is using. So let's just say there is a sales rep that uses a corporate credit card, and they are out of town for a sales meeting, okay? And they need something for their presentation that they're doing, right? And so they go to a local store, maybe their presentation is a few days, and they're like, oh man, I forgot to buy this HDMI cable I need for my projector that I'm going to do this presentation for. If they're using a corporate card and they go to your website and purchase that item, if you're pushing level 3 data, you can provide level 3 rates, and it's all depending on the card. Okay, so obviously the lowest rate card that someone's going to provide is a consumer debit card. That's going to be the lowest rates you have. But if you're a salesperson on the road, you're not going to use your debit card. You're going to use your corporate credit card, and those fees are much higher. So if you can process that credit card on level 3 rates, you are paying less for that. So it doesn't matter if you're in a B2B or B2C situation, you don't know what kind of credit card that person has in their pocket. And so you always want to be prepared to get the lower rates, no matter what type of site it is. I don't know if that answers your question or not.
No, that's super helpful. So in the case of a B2B person who has say an Amex Platinum card that has all the points, are they going to get B2 or level 3 rates, or that will they be marked? Will it be brought down to a level 2?
Good question. So level 3 rates are specifically related to Visa and MasterCard and not American Express.
Great. And it doesn't matter if they have a points card or a non-points card, if it's a debit card or a Visa card or a regular credit card?
In terms of Amex?
No, if it's a Visa or MasterCard, does it matter if they have a card that is one of the miles cards, or if it's a debit card or a regular charge card? Or what if you're a Mexican client and you're typically buying in the US with a Mexican bank Visa card? Is that going to impact your level that you're being able to get discount rates at?
Yeah, so they're in terms of the level 3 rates, they're specifically geared towards those credit cards that are corporate related cards and that generally have the highest rates in the industry. Okay, so if that person that you identified in your example was using a particular corporate card, and that's what it's geared towards, because keep in mind, Visa and MasterCard wants every company in the world for their corporations to use corporate credit cards. And these are ones that, like I said, they offer the biggest perks in the industry. And so, like I said, those perks, the burden of those perks always fall on the merchant. And so if they happen to be using one of those cards, then level 3 rates would apply to those. Level 3 rates wouldn't apply to your standard consumer card. Those rates are already lower, right? But you just never know who's using those cards. And if you're doing a significant amount of B2B business, then you're going to be dealing with that quite a bit. And it could be significant. I would say the largest reduction in cost that we've seen recently was a merchant. I can't remember what their monthly volume was, but they did a significant amount of B2B business. And when we did the analysis on their card, on their statement, they ended up saving $400,000 a year in merchant fees. That's just fees to do business. And we were able to save them $400,000 a year. Now, that's not the normal. That's definitely not the norm, but they just happen to be an amazing fit for what we provided in the level 3 processing. And, if you think about the amount of money they could have saved over the last 8 years, it was in the millions.
Yeah, wow. Okay, so I know we don't have a lot of time left, but can you just kind of briefly go over how this, if you know, how the PCI is going to impact the Wagento end-of-life clients?
Yeah, so this is a significant question right now. And I don't know if you saw it, and we can provide links to it, but our executive vice president of sales did a live session with TJ Gamble, e-commerceaholics. We dealt into this, significantly. I currently have some questions out. We have a way that we can contact Visa on this. This is definitely a big question right now. Magento 1, June, the end of June, end of life. Right now, Visa says we can't support it. And so when you have a payment processor who's, doing business with multiple industries, and they look at the Magento 1 side, and if Visa says, no, I'm sorry, we're not going to support it, well, then you're your payment provider, if they're trying to follow the guidelines and do the right thing, they're not going to be there for you. They can't continue to support your business. So I am waiting right now. I'm expecting in the next couple of days to hear back from Visa on some questions that I posed to them. One question was, the question was, related to being able to provide patches, security patches. And, if someone else is able to provide those patches, will Visa say that's okay? I don't know that. I don't know the answer to that. The other question is, if your payment provider is using a hosted form, which basically keeps credit card data from actually residing in the website, is that going to be okay for Visa? That's probably the most secure way you can handle credit card data. Is that going to be compliant? Is that going to be okay? So these are the answers I'm waiting to hear back from Visa that I have personally sent in to hear. And I hope to hear back from them shortly. And when I do, you'll be the first ones to know what that answer is. But right now, it's hard for me to tell you whether or not they're going to be okay with that. I just don't know right now.
Wow. Okay. Yeah. So I think we're out of time. But I think there's a lot of really good things that we've talked about today. There's probably a number of topics we could go on and on here for the next hour even. But
Yeah, absolutely.
yeah, I appreciate you putting together this webinar, and it was super interesting. And we will post it and have it available to everybody to watch.
All right. Well, thank you, Brent. I appreciate the time, and we're here to educate. So no pressure to anyone. You don't have to do business with us. So it's if you have any questions or want to know how your merchant statement stacks up, I invite you to challenge us to see what we can do. Like I said, there's no cost in it. I think it's fun. I think everyone should have their merchant statements analyzed every year. I think it's just a smart business move. And so if you want to do it, just send us a couple months of statements. We will run the analysis for free, and we will send you the data for free on how you stack up.
That's great. Thanks a lot, Brian.
Yeah, all right. Well, I hope you have an awesome week. Next week, I'm going on vacation, so I'm going to be on the beach. So I know, Brent, you probably are not going to the beach, and well, I feel sorry for you.
So thanks a lot.
All right. Thank you very much.
Bye.
Bye.